Hello traders and welcome to another video review. Today is Monday, October 20th, 2025. Let's take a look at the economic calendar for today. During the Asian session, we got data from China. Plenty of data from China had been released, including the People's Bank of China loan prime rate. The loan prime rate has been set at the level of 3%, just as expected, just as before. GDP is down from 5.2% to 4.8%, but still better than expectations of 4.7%. Industrial production up from 5.2% to 6.5%, and the unemployment rate is down from 5.3% to 5.2%. Press conference from Bank of Japan was done, and from the press conference from the People's Bank of China was done. We are still waiting for the other data that are set to be released at the beginning of the London session. German PPI scheduled for release at 9 o'clock, and the ECB Schnabel speech set for release at 10 o'clock. During the US session, we got LMPI data from the Canada scheduled for release at 2:30, and then we got data from the US business inventories, retail inventories, industrial production. All of this data are scheduled for release at 4 o'clock. And Bank of Canada Business Outlook Survey. This data is scheduled for release at 4:30. TIC net long-term transactions are scheduled for release at 11 o'clock. 45 minutes later, we got the last event of the day, trade balance data from New Zealand. So pretty easy day, because most of the very important data releases had been done during the Asian session. I'm talking about China. So without any further ado, let's switch to the charts. We start with Euro Dollar. So what's going on Euro Dollar? What is going on Euro Dollar? So well, we got a breakout. We got the double bottom. We expected this movement to the downside to go lower towards this level 1.15, but we didn't. Nevertheless, we still got double bottom. Let me just copy this and move it. If I can grab it, I knew it. And that's it. So we got the double bottom. Okay, let's leave it like this. 1.1543. This is not necessary. Okay, double bottom. Movement to the upside above the technical resistance. Now it is support 1.1660, 1.1644. We are still above the trend line, but after the initial breakout above 100 periods moving average, the blue line, we made a local high at 1.1729 and then reversed big pin bar at the end of the move into the extremely overbought conditions. So look at this. We went straight from extremely oversold conditions here, bullish divergence, overbought conditions, right? So right now we might say the market is technical. The market is technical, so we should see more movement to the downside. Obviously, it might help to place a Fibonacci retracement tool here, but first you need to place it correctly. So it's the other way around. I'm always getting this a different way than I want. Okay, I don't want this. Oh god, I didn't want to move my technical resistance anywhere near. There you go. This is the level. So that's the retracement. We retrace already around 38%. We are waiting for the 50% at 1.1636. So we focus now on this part of the chart. We will see how this will go. Nevertheless, there is still a chance for a test of the trend line, and then breakout lower, that's bearish, breakout higher, that's bullish. British pound is consolidating, British pound is consolidating the recent gains. The recent local high was made at 1.3470, and that's a technical resistance, local technical resistance. Market is consolidating the recent gains in this daily zone, so please stay focused, stay vigilant. We got this daily zone. Let's say, okay, it will be black. Oh, no, we got the black. Okay, so it will be violet. Okay, so that's the zone. Any breakout lower means that the technical support at 1.3368 is next for a test. Any breakout higher means that the technical resistance at 1.3526 is next for a test. Momentum, well, still positive but not strong, 55 points only. It looks like we've done another wave to the upside here. It might be a double X, and now the wave Z to the downside of the overall complex structure, time and consuming structure WXY double XZ is next to make. So that's the cable. US dollar versus the Japanese yen 4-hour time frame chart is showing us that the level of 151.20 is now technical resistance. This level here is technical resistance as well, 1.5066. This technical support, no one cares of the market participants, so we will remove it. And this very nice movement to the downside almost started to filling the gap. Right, so this is still the gap, and we are waiting for this gap to be filled. All right, so let me just move this gap here. There you go. This low and this high is correct. So that's our plan. So gap has a tendency to be filled. Nevertheless, we went from the extremely overbought market conditions down to the extremely oversold. We went higher. All right, we went higher. Retraced a little bit. Nevertheless, any breakout below 149.39 might be first step to cover the gap, to fill the gap basically. So now we wait. US dollar versus the Swiss franc, we are back below that trend line. Let me just place my technical support. The technical support will be placed here. 7,828 is the technical support, and it looks like the market really wants to move there. Let me just move my technical line, which is the trend line. And obviously locally we got this technical resistance. It might be a little bit violated, 7,932. Nevertheless, we are just below the trend line. So if the market is technical, even this bounce from the extremely oversold market conditions might stop here, and the market might continue lower. So the next target, if 7,872 is violated, is the low at 7,828. Right, so the US dollar versus the Swiss franc, bearish. US dollar versus the Canadian dollar, a local swing high. We might, local high and the swing high at the same time, 1.4079. Okay, marked. There you go. This is the technical resistance. Now, this level used to be very nice support, 1.4032. Now it's resistance as the market keeps moving lower after hitting extremely overbought market conditions. So the next target might be the technical support at 1.3986 or 100 periods moving average at 1.3976. So the situation is right now quite simple. Momentum testing the level of 50 in a minute. Nevertheless, momentum is negative. So the bears are in charge of the market on US dollar versus the Canadian dollar. And now the hottest market of the year, which is gold market. Biggest correction yet has happened on gold market. Let me just place my price range tool. From the swing high of 4,376 to the local lows of 4,185, we got minus 4.33% correction. Now please notice something very special here on this chart. Every time we go towards the level of 50, every time we almost every time bounce from this level, except this one situation here when we went to the level of 40 and then went up towards the extremely overbought conditions. So extremely overbought, test of the neutral level, extremely overbought, test of the neutral level, extremely overbought, test of the neutral level, extremely overbought, test of the neutral level. So what will be, if this is the pattern, what will be the next movement for the gold? Well, draw your own conclusions. I think it's pretty self-explanatory. Now on a 4-hour time frame chart, we are way below the breakout above the trend line, which was about 3,352 in August, in the end of the August 2025. And the market is treating this 100 periods moving simple moving average as some sort of the dynamic support. So for now, if the market wants to go towards the 100 periods moving average, it needs to drop 8.5% for now, right? And that would be the biggest correction since the lows of 3000 were established in the August. Let me just take a look. Yes, basically, yeah, something like this. Yep, exactly. So for now, temporary pause. We expect the gold to break, to bounce above the neutral level and move higher. If there is no such a pattern, then first red flag is on your chart, saying that maybe bears want bigger correction. Maybe we will be waiting for the result of the situation. And now the Bitcoin went almost towards this low from the record volatility movement and wrecked movement on October the 11th. So that was 9 days ago, 102,320. We went as low as 103,604, and since then the market keeps moving higher. We broke below above the level of 50. We broke above the technical resistance here, so we are back inside of this very interesting range. Well, the next target is obviously this technical resistance, 116,031, and then obviously 100 periods moving average, and then eventually we got this supply zone, right? The pink rectangle. So now the situation looks nice, very nice, strong, aggressive breakout candle above the level of technical resistance. We continue, at least for now, because there is still some hours to close the 4-hour time frame chart. Momentum is strong, momentum is positive. Up should we go on Bitcoin? The question remains, will the bulls be able to break above this 100 periods moving average, previous technical level, which is a local swing high, and the supply zone. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.